The markets are very convinced, they're very bullish. Earnings estimates are still rising here, so everybody's still expecting that things are going to be better going forward right now. And that's feeding into the bullishness of the stock market. And the stock markets have clearly become much more bullish as of late. And despite the fact we've had a bit of correction here over the last month, really hasn't taken away a lot of that more bullish exuberance, particularly in technology companies and AI, etc. Here's what you need to know before the bell this morning, though. The market did rally yesterday. And we had talked about, hey, this market's got to get some legs to it here. It's pretty oversold on a short-term basis. The MACD sell signal is starting to flatten out here, so that's starting to head up here towards a turn. So a couple more days of positive action, we're going to get a MACD buy signal with the market being in a fairly decent position after a 5% correction from the peak for a rally. Now, the market is right now going to challenge today as we open up the markets. We're going to challenge the 20 and the 50-day moving average, which are literally sitting right on top of each other right now. So again, when we kind of take a look at what the markets are doing at the moment, it's just a function that we're challenging that first level of resistance, and we've got to get through that level so that we can start to see a push higher here. So again, this kind of the first challenge of resistance is going to be kind of the first important point that we've got to deal with. A move higher through that's going to clear the way for a market rally back to the previous high. So, one of the things that we're going to be talking about here over the next few days, in particular, as we kind of go through the cycles, has the market set the high for the year? That's going to be the question. And, do markets have to start dealing with economics here for the rest of this year? And so markets kind of either trend sideways or lower through year end, or is the market going to break out of this previous high that we set back in June and July and make a move higher into year end? There's kind of bets on both sides of the ledger for that right now. But initially right now, what we've got to do is get through this first level of resistance. This has been a very textbook correction so far. Not a big jump in volatility, no big, kind of screaming down days of any sort. The market came down, kind of, technically tested a good level of support right there at the 100-day moving average and these previous lows. So again, a very normal textbook correction from overbought to oversold. MACD through its current oscillation, very normal. So again, nothing surprisingly, bearish about this, nothing alarming about this correction. Very textbook correction. So now the market's in a better position to make another leg higher here, and this gives you an opportunity to put some money to work. We've been doing that same thing here over the last couple of weeks, is kind of nibbling at some stocks that we want to own here at lower levels, kind of a better entry point to put money to work. But this is the big challenge for investors. At the high, everybody wants to buy in because the market can't go high, it can only go higher. After this correction, all of a sudden nobody wants to buy anything because markets are going to crash. So, it's always that psychology of investing that keeps us from doing the things that we should be doing. And again, this market's had a very textbook correction. Now, what's the bearish side of this and what could happen? Of course, we have to maintain a position on that, obviously. So if the market does fail here and then take out this 100-day moving average, we are going to go lower. That will change the very definite trajectory of this market from bullish to more bearish, and that would certainly suggest that we would have a bigger correction heading into year end. So again, right now, this is a very textbook correction that suggests the market's going to move higher. However, as is always the case, we always have to consider that bearish side as well, that risk side, and say, okay, what could go wrong here? And what could go wrong here is something that spooks the markets in the next few days. We have a correction, take out support, and then that's going to change the whole dynamic of what we're talking about here over the next couple of months. So again, is that a possibility? Absolutely, and we need to consider it. But that's what you need to know before the bell this morning.